At Deloitte China. He joins us now live. Tao, great to see you again. It's been a long time, so pleasure having you back
yes,
on the
indeed,
show.
Martin.
What do you make of these IMF projections?
I think IMF's revision is very sensible. I think after first quarter, this blow number 5.3, I think almost everyone would feel compelled to upgrade this year's growth. I think 5% right now looks quite conservative. External sector continues to do extremely well. Property sector is actually resilient. Even sales numbers are dreadful. But I think a slew of measures clearly have put a floor of this sector. I think this sector's investment growth this year, I wouldn't be just a mild contraction, 4 to 5% compared to last year. So in a nutshell, I think revisions are quite sensible.
Quite sensible. Okay, so when you break it down, the drivers of growth, seems to me that the best thing China's economy has got going for it right now are exports, right? And a lot of that is because of how competitive, which is a polite word, the renminbi is right now. Can the government continue to have the RMB as weak as it is right now, and potentially even weaker?
Actually, I wouldn't say RMB is competitive. This year, the story has been this overwhelming strength of the dollar, particularly against the Japanese yen. So if you look at RMB against other currencies, I would argue RMB actually perhaps is too strong. But of course, as you said, because China's exports already are doing well, it will be quite hard for China to adjust the exchange rate.
Okay, and here's the issue, right? If you think the renminbi can, maybe even should be weaker still, this isn't going to help to stem outflows of money from China. As you all know, a lot of people, including businessmen, maybe even politicians, who knows, maybe we shouldn't talk about that, are continuing to try and get money out of China. What happens then?
Well, I think if you make the exchange rate more flexible, the objective clearly wouldn't be competitiveness, because China's exports are already quite competitive. It's really about reflating economy in a more effective way, or making debt reduction more effective. At the end of the day, we still have to deal with local government debt. We still have to deal with overhang of real estate sector. And we know this year's the big gap between nominal GDP growth and the real GDP growth. So the objective of more flexible exchange rate has nothing to do with the competitiveness.
All right, Tao, I'm glad you brought up the issue of debt. I mean, China just launched the first batch of their 1 trillion yuan ultra-long special treasury bonds last week. What do you make of that effort? I mean, in the past, historically, they've leaned on provincial governments to get the money out there, right? I mean, right now they can't do that because provincial governments are not in a position to extend any more credit, right? Now they're coming to markets, but the problem is the market is too shallow, not deep enough, and nowhere near liquid enough. It's too small, basically.
Yeah. So the central government has to raise more debt. I think that's consensus. It's always difficult to discipline. Let's say, Martin, how do you want to discipline your children? I mean, that's a bit of relationship between central government and local government. So at the end of the day, the central government has to raise more debt. But interest rate low, there's no threat of inflation. So I think China has capacity to do that. And I would argue the central government could have been even more aggressive and audacious.